in this lecture I am going to cover you that why sales tax was replaced by VAT. In the previous lecture we discussed different types of taxes, direct, indirect, and various types of classification of taxes. So let us understand in detail why sales tax was replaced by VAT, because understanding of this is very much important, very much required for understanding GST. So let's understand why sales tax was replaced by VAT. Why sales tax was replaced by VAT. So sales tax used to be imposed on sale of goods within the state, and then VAT replaced it. So VAT used to be implemented on sale of goods within the state post 2005. So let's take an example of sales tax. And whatever examples I am taking to explain you tax, calculation will never be asked from you in the exam. But just to have a better understanding, proper understanding, I am taking these calculative examples. Otherwise, you are not supposed to calculate anything in the exam as such. Okay, so just for your understanding point of view, so that you get a better understanding and full conceptual clarity is there. So sales tax. Let's take a sales tax example and then I will take a VAT example. Let's assume that sales tax rate is 10%, right? Sales tax rate 10%. So let's say this is A. A sold something to B, and B sold something to the consumer. This is the consumer. So A is a business entity, B is a business entity, and C is the consumer. So A produced goods, and A produced goods worth rupees 100. So suppose A wants for his work, A wants to charge rupees 100, and just assume that A did not purchase any inputs from previous suppliers. This practically doesn't happen, but just for example. So A for its own work wants to charge 100 rupees, right? So A sold to B. So how the bill will be prepared? Sale price 100, sales tax 10, and invoice 110. Invoice 110. So B will pay 100 plus 10. B will pay 100 plus 10, and A will deposit rupees 10 to government. A will deposit rupees 10 to government, right? Now B did some work, and for his work B wants rupees 200. For his work B wants rupees 200. So B sold the product, B did some value addition, and B sold the product to consumer. So what billing B will do? So B purchased the input in how many rupees? 110. B paid 110 and purchased the input, and then B sold. Sale price, it purchased in 110. See, B has purchased the product in 110 from A, and for his work B wants 200. So in how many rupees B will sell to the consumer? In how many rupees B will sell to the consumer? So B has already paid 110. For his work B wants 200. So he would like to sell in 200 plus 110, 310. Now sale, he tries to sell in 310. So there is a sales tax 10%. 31. So invoice invoice 341. So consumer will pay 310 plus 31 and B will deposit to the government rupees 31, right? Now what is happening here is, if you will check, what is happening is price of the product. Let's see, price of product. What is the, so consumer, how much price consumer is paying? 341 rupees, 341, right? Now when consumer is paying 341, what is the value of the product? What is the value of the product excluding tax basically? So value of the product is 100 plus 200. I hope you have not forgotten the concept of value addition. See, if I purchased a raw material worth rupees 20, I purchased a raw material worth rupees 20 and I converted that into a finished product and sold it in 50. So purchased raw material in 20 and selling the product in 50. So my value addition is 50 minus 20, 30. So value of my work is 30. That is called value addition. So in this case, A value addition is 100, B value addition is 200. So value of product is 300, but price of the product because of the tax becomes 341. So value of product excluding tax basically is rupees 3. Tax paid rupees 41. Tax paid rupees 41, right? Effective tax rate, effective tax rate. Effective tax rate is equal to, how we will calculate? 41 upon tax paid 41, value of the product 300, so effective tax rate. So to get 300 value of the product, the consumer is paying 41 tax. So on 300 value of the product, the consumer pay tax 41. So 41 upon 300 into 100. This becomes 300. 13.67%. So effective tax rate is 13.67% and official tax rate 10%. So official sales tax rate 10%. Official sales tax rate 10%. Effective tax rate 13.67%. So government is claiming that the tax rate is 10%, but effectively tax rate is increasing to 13.67%. Why? Why is this happening? Because see, on this 100 rupees tax has been imposed. On this 100 rupees tax has been imposed, right? Now this 100 rupees is here also in 310 and again tax is being imposed. On this 100, 310 includes this 100, on 100 already tax has been paid, again tax is getting imposed. And this 10 rupees is the sales tax. This 10 rupees also getting included here, 10 rupees tax, and on that tax again sales tax is imposed. tax on tax, cascading effect of tax. So because of tax on tax, cascading effect of tax, the effective tax rate has increased. And if this chain goes a little longer, this effective tax rate will be much higher, 15%, 20%. This was the major challenge with sales tax, right? This was a major challenge with sales tax, that effective tax rate used to be much higher than the official sales tax rate. Now let us understand how this problem got resolved in VAT, value added tax, and that's why sales tax was replaced by VAT. So let's take an example, same example for in case of VAT. Same example in case of VAT. Okay, so let's the same. Now, if the same thing happens in VAT regime, then what happens? So let's assume that VAT rate is again 10%, right? So let us understand with the same example in case of VAT. A, B. Suppose A does value addition 100. A does value addition 100. B again does value addition rupees 200. Consumer. Right? Okay. So this is VAT example. Same tax rate, similar example. In VAT, what government says is, every supplier, these are suppliers, A and B are suppliers. A is supplying to B and then B is supplying to consumer. In case of VAT regime, the concept is that the supplier has to pay the tax on his value addition. So what's the rule of VAT? Every supplier has to pay tax on their value addition, right? So A will pay tax on 100 and B will pay tax on 200. This is the mechanism in case of VAT, right? So let us understand that how it practically happens on ground. So for A, it's fine. A will sell to B and B will pay 100 plus 10 and government will get rupees 10. So how this billing happens, and assuming that A is not purchasing any inputs, just let me write it here, 100 plus 10, it becomes 100. So A will sell to B, B will pay 100 plus 10, government, it deposited 100. Now what I said is that in case of VAT regime, every supplier has to pay tax on their value addition. This is the concept in VAT. But how it practically happens on ground, there is a slight difference. Now come to B. So B purchased this input. Now B will do some value addition and B will sell to the consumer. So B has to pay tax to government. How much B has to pay tax to the government? B will pay tax on his value addition. His value addition is 200. So how much tax he will pay? 20. 10% of 20. A has paid 10% of 100, and again I am repeating, in case of VAT regime, every supplier has to pay tax on their value addition. This is the concept behind VAT. But practically on ground, to implement it, there are slight differences. Now B should deposit 10% of 220 rupees tax to the government. 20 rupees tax to the government. So how should B sell this product to the consumer? Should B sell like 200 plus 20? Should B sell like this? No. Then B will be in loss, because for his work, B's value addition is 200. That means for his work, B wants 200 rupees. But he has paid 110 to purchase the inputs. Na? What about that? How it will recover from the consumer? If B will prepare the bill like this, 200 plus 20 is equal to 220. In this way, B should not prepare the bill. So how should B prepare the bill? that it deposits 20 only and he is able to recover the money. So, let me explain. Just let me explain, and I am repeating things again and again, going a little bit slow, because I know that this is tax a little bit conceptual and you must digest it properly. If you will not digest this thing, you won't be able to understand GST and its issues and reforms. So, try to understand this VAT mechanism very well, because this is the crux of GST, you will see later on. So, understand this very well. Each and every word which I am saying, listen it carefully and try to visualize it. Let me again repeat it, that in case of VAT regime, every supplier has to pay tax on their value addition. This is the concept. But if he will sell in 200 plus 20, he will not be able to cover the cost. So, on ground it is implemented a little bit differently, but ultimately every supplier pays tax on his value addition. Every supplier pays tax on his value addition. See, so B purchased the inputs in 110, B for his work wants 200 rupees. B wants to sell the, B wants for his work, B wants to pay, B wants to charge 200 rupees. So, B has to effectively pay rupees 20 to the government, right. So, see here, B has paid 100 plus 10, B wants 200 for his work and B has to pay 20 to the government. So, how much B would like to get from the consumer? 110 plus 200 plus 20. So, it will become 330. It will become 330, 110 plus 200 plus 20, because B has to pay to government also 20. So, it will pass this burden to the consumer. So, from consumer it would like, how much it would like from the consumer? 300 plus 30. It would like to get from the consumer, right. So, when B gets 300 plus 30 from the consumer, B gets 330 from the consumer, 20 he deposits to the government. Out of this 20 he deposits to the government, 200 he kept for himself and 110 he has paid from his pocket. So, everything is fine. Out of 330 he has already given 110, he will keep 200 and pay 20. So, everything adjusted. But on ground it happens a little bit differently. How come? When B collects 300 plus 30 from the consumer and B was going to pay 20, B was going to pay 20 out of this, then government comes into picture and says that don't pay 20, you pay me entire 30. You pay me entire 30, and then government will return to B what he has previously paid. So, government is saying you pay, out of 30 you just don't pay 20, you pay the entire 30 and you give a proof to the government that you have given 10 rupees and it has been deposited to government. You give a proof. Once you give a proof, this 10 rupees will be returned to you, to B. This 10 rupees will be returned to B. So, effectively B paid how much? 20. In this way, this VAT mechanism works. In this way, this VAT mechanism works. So, effectively what is happening? B is paying 20 effectively, A is paying 10, everyone is paying value, everyone is paying VAT on their value addition. So, how the billing happens for this? So, for B, the cost of inputs and how much it is purchased, B will write cost of inputs 110 that he wants. He does value addition 200, so he also wants this 200 from the consumer. So, value addition 200. And since B knows that 10 rupees which he has paid, government will reimburse, government will give back. So, he subtracts 10 rupees. What he writes is VAT, he writes VAT credit, I will explain this, minus 10. He subtracts minus 10 because government will give him back. So, this becomes 300 value of product. Value of product becomes 300 and VAT becomes 30. So 300 plus 30 consumer pays. 300 plus 30 consumer pays. Now in this case, if you will see, price of product for consumer 330. Value of product rupees 300. Tax paid rupees 30. Effective tax rate 30 upon 300 into 100 is equal to 10%. Official VAT rate 10%. So there is no difference between effective tax paid by the consumer and the officially declared VAT rate. There is no difference. And why is this so? Because of VAT regime, because in case of VAT, tax is paid only on the value addition of the supplier. Right? See what is happening here, just let me tell you is, okay, but before that let me tell you one or two more things. See what's happening in this case is, government is saying to B that when you are selling it to the consumer, you pay the tax on total value. Not only on your value, you pay the tax on total value 300. You pay the tax on total value 300, that is 30. And whatever tax has been paid previously, government will give back. Okay, let me just elaborate it more because it requires more understanding to understand UGST. Let me just elaborate it more. I want you to visualize something, and that's why I'm again repeating it again and again, just to have your proper understanding. So have patience. A, B. A value addition 100, B value addition 200, 100 plus 10, and A deposited to government rupees 10. Now when I am standing here at B and B is trying to sell, So if I am B, I have already paid 110. For my product, I want 200 rupees. For my work, I want 200 rupees. And I have to pay effectively 20 rupees to government. So government is saying to B that don't pay tax only on your value 200. You pay the tax on entire value. See, ultimately, in this case, how much tax government will get? 10 rupees on 100, 20 rupees on this. So government will ultimately get 30 rupees tax. So if every supplier pays tax on their value, ultimately government will get the tax on total value of the product. Government will get tax on the total value of the product. Let's say, for example, this is C and he does value addition 300. What's the concept? Every supplier should pay tax on their value addition. Every supplier should pay tax on their value addition. Government. So from here, government will get 10, 20 and 30. 10, 20 and 30. So government will get in total, will get rupees 60. Right? Now let's see what's happening. Here. When B is selling to C, how much C will pay? 300 plus 30. So ideally B has to pay 20. But out of this 30, government is saying that to B that you pay the entire 30 and whatever you have paid will give you back. So effectively you paid 20 only. Now C. Let's say this is consumer. Now suppose I am C. I am the supplier C. Listen carefully. I am the supplier C. I have already paid 30 rupees tax, 300 plus 30. I have already paid, listen carefully please every statement. I have already paid 300 plus 30 rupees tax. I have to still pay 30 rupees tax. So I have already paid 30 tax. I have to pay 30 tax still. So in total 60 tax. Now when I am selling it to the consumer, I will collect 60 from the consumer. And I have already paid 300 for the inputs and for my work I want 300. So this 300 plus 300 also I will pass on to the consumer. 600 plus 60. Now one option is that out of 60 which I collected tax from the consumer, 30 I have already paid from my pocket, 60 I am collecting. So out of 60 I may pay just 30. Out of 60 I just may pay 30. This is one mechanism, but it doesn't happen like this. It doesn't happen like this. What government is saying is that to see that you are collecting tax 60. So 60 tax is on the total value. 60 tax is on the total value, right? So government wants tax how much? 60 on the total value. Government wants 60. So government is saying to see that you pay the total tax 60 which you have collected, and whatever tax have been deposited earlier, government will give you back. Because whenever I am standing at the end of the chain C, I will be selling the total value of the product to the consumer and I will be collecting total value of the tax. Government is just saying that you pay that total value of the tax, and whatever tax have been deposited earlier, that will be given back to whom? To C. Because ultimately this 30 rupees tax which has been paid, 10, 20, who has paid from his pocket? C has paid from his pocket. I hope I made this thing quite clear. Because at any, suppose this chain is 7 suppliers are there. Now at the end of the supplier, when the supplier sells to the consumer, he will be selling the entire value of the product to the consumer. He will be collecting the entire value of tax. Government is just saying that you pay the entire value of tax. And whatever tax have been previously deposited by other suppliers and paid by the end supplier, that government will return to the end supplier. So government is just saying that C has already paid 30 from his pocket to B and A for deposit, and C is collecting 60 tax on the total value 600. So government is saying that you pay the entire tax 60, whatever you have collected, and whatever you have given from your pocket, government will give you back 30. So ultimately C paid 30 rupees tax, right? So 600 plus 60, this thing, out of 60 which the consumer paid, C deposited 30, B deposited 20, A deposited 10. So every supplier is depositing tax on their value addition. And out of 600, 300 C keeps, 200 B keeps. Very simple mechanism. Even if this chain goes to 10, means to the length of 10 suppliers, doesn't matter. No cascading effect. Why no cascading effect? Because every supplier is paying tax on their value addition, and previous taxes are being paid by them. Now see, this tax 10 rupees paid by B, right, on the purchase of inputs, So taxes paid by B on the purchase of inputs is credited back to B, Taxes paid by B on the purchase of inputs is credited back to B. This is called input tax credit mechanism. Input tax credit taxes paid by B on the purchase of inputs is credited back to B by the government. This is called input tax credit mechanism, and because of that, cascading effect is eliminated. Effective tax rate is same as official sales tax rate. Effective tax rate is same as official VAT rate. And there is a benefit of compliance also here. Suppose by any mechanism A did not deposit tax to the government. A did not deposit tax to the government, so government will lose tax revenue. But here, if A will not be paid to A, if A will not deposit 10 rupees tax to the government, then B will not get 10 back, because when B is paying the full tax 30 rupees to the government, then B needs to submit the tax slip to the government. Government matches it, then only government gives it back. So, because of this input credit tax mechanism and inbuilt compliance mechanism is there. Inbuilt compliance is there. Inbuilt compliance is there, right? So, VAT is quite simple. VAT is quite simple and effective. VAT is quite simple and effective. But when VAT came, you are seeing that in case of VAT, the tax on tax and cascading effect of tax is resolved. Then what was the purpose of bringing GST? Then why there was a need of GST when VAT resolved this problem? Effective tax rate, official VAT rate begins. What was the need for GST? Let me explain. And I assume that you have understood this mechanism properly. Everyone must understand and try to visualize it, how it is happening. Visualization is very important for understanding GST. The simple thing, again I am saying, when I am standing at any point in the chain, suppose I am standing at B, I am supplier B. So when I am selling something, then I am selling all the value till I have done. I am selling the entire value of the product till my level. So I am collecting the value, I am collecting the VAT of the value which I am selling, total value. Whatever value I am selling, I am collecting the entire tax on it. Government is just saying that you pay the entire tax, and whatever you have paid previously, that government will give back to B, right? So let us understand that even after VAT, what challenges remained because of which government brought in GST, right? What challenges remained even after VAT? Because of which government brought GST. Because of which government had to implement GST. So what challenges remained even after VAT, because of which government had to implement GST? Basically, two major challenges remained even after VAT. First, two major challenges remained even after VAT. Two major challenges remained. First one is, see, I have, suppose A sells something to B. A sells something to B, his value addition is 100. Now, A is manufacturing, doing manufacturing, producing some item, and then he is selling to B. So, if A is manufacturing something, don't you think that excise duty will be imposed? Central government will impose excise duty? Yes. If A is doing manufacturing, first central government will impose excise duty. So, what will happen? Even if, so VAT is there and central government's excise duty. So, VAT is of state government, excise is of central government. So, if A is doing manufacturing and then selling, so what will happen is, first central government will impose its excise duty and then state government will impose VAT. See, I said that excise duty is imposed when the products move out of factory area. Even if a product is not sold, does not matter, excise duty will have to be deposited, because excise duty needs to be deposited just after the manufacturing. Whether sell happen or not doesn't matter, right? So, okay, let's say value of product rupees 100 value product produced. First excise duty will be imposed. Excise duty. Let's say excise duty is 10%. So 10% of 100, this becomes rupees. Then while A will be selling to B, then VAT is imposed. So VAT will be, so let's say VAT is also 10%, VAT rate is also 10%. So VAT 10% of what? Of 100 plus 10, because now this excise duty gets inbuilt with the product. So VAT will impose 10% off on the value of the product and excise duty too. So this becomes 11. So price of product $100, 10 and 11, rupees 121. So central government is saying that they are imposing just 10% excise duty. State government is saying that they are imposing just 10% of the VAT, but effective tax rate is 21%. Rupees 120. On 100 rupees of product, the price becomes 121. So effective tax rate is 21%. So central government saying 10% tax excise, state government saying 10% VAT, but the effective tax rate is 21%. And if this goes further, then this effective tax rate will keep on increasing. Because here also there is tax on tax, there is cascading effect of tax. Here also there is tax on tax. There is VAT on excise duty. So there is still tax on tax. See, VAT resolved the problem of cascading effect of taxes only for the state taxes. Only for the state taxes. That state's taxes will not become cascading. But if central government is imposing its own excise tax, excise duty, and if central government is imposing its own excise, state is imposing its own VAT, then here VAT and excise don't adjust against each other. Don't adjust against each other means they are imposed one top of another. So it's still cascading. So VAT resolved the problem of cascading effect only for states' taxes. But if center is imposing its own excise and state is imposing its own VAT, then both taxes again create cascading effect. They were not adjusting. Not adjusting means if taxes are adjusting means 10% and 10% will become 20%. But here taxes are not adjusting, they are being imposed one after the one on top of another. So still there is cascading effect. So center is imposing its own excise. Center is imposing its own central sales tax on top of VAT. So cascading effect. So even after VAT came, cascading effect remained there because of center levying its own tax, state levying its VAT, both taxes creating cascading effect. This was one major challenge which remained even after VAT. So first challenge was center levying its own taxes excise, CST, central levying its own taxes and state levying its own VAT, and both were not adjusting, rather creating cascading effect, right? So this was one challenge even after VAT. The second challenge which remained even after VAT. So let's say this is Uttar Pradesh, UP. A sold something to B. A sold something to B, and this is Bihar. B sold something to C, and C sold something to consumer. This is Bihar. So let's assume that A did value addition 100, B did value addition 200, and C did value addition rupees. Now, of course, when some manufacturing is happening and sale is happening, then center imposes its own tax and states imposes its own tax, and cascading effect gets created, that I explained you in the previous example. Here in this example, if A does manufacturing and sells to B, again excise will be imposed by center and state will impose VAT. But what I am trying to explain is the second challenge. So certain taxes I am ignoring, so that you get a feel that what was the challenge, because this excise duty and VAT, what challenge it creates, I have already explained you. So now I am assuming all the central taxes is 0%. All the central taxes is 0%, just to give you a feel of what was the second challenge. I am just for simple calculation, even if it is there, it will not make any difference, but just for simple calculation, simplicity, just to focus on that particular challenge, I am ignoring all the central taxes to 0, right? Now, if A sells something to B, so what? And so VAT will be imposed, sale of goods within UP. So B will pay how much? And let's say VAT rate is 10%. So B will pay how much? 100 plus 10, and A will deposit rupees 10 to go. Fine. A will deposit VAT to government. Now, when B sells to C, now you know that it is across the state transaction, interstate. Interstate means from one state to another state, INTER, interstate. So now B is selling across the state. In across the state, VAT is not imposed. In across the state transaction from one state to another, VAT is not imposed, rather central sales tax is imposed. And for your simple calculation, I am assuming CST and all other central taxes as 0, just for simple calculation. So no VAT on this, and I am assuming that all central taxes are 0. So what will happen is, in how many price B will sell to C? By B has already paid 110. For his work, B wants 200. He has already sold. He has already paid 110. For his work, B wants 200. And there is no VAT on this transaction, and CST is 0. So B will sell in 200 plus 110, 310. So C will pay 310. And B will not deposit anything to government. B did not collect VAT, and CST is 0. Right? Okay. Now it came to C. Central sales. Now it came to C. So now focus on C. C has already paid to B how much for the purchase of inputs? 310. 310. For his work, C wants 300. For his work, he wants 300. And he has already paid 310. So C will prepare a bill. Now when C will be selling to consumer, VAT will be applicable. VAT will be applicable. Let's say in Bihar, VAT rate is again 10%. So when C will sell to the consumer, VAT will be applicable. So how the billing happens in VAT? When C sells to consumer, see what happens. When C sells to consumer, how this bill is prepared. What C will do? For C, the cost of inputs is 310. So C will write. But it will try to pass on this burden to the consumer. So cost of inputs is equal to rupees 310. Right? Value addition. How much work B did? 300 rupees. 300. And C knows that this tax which has been deposited VAT, it will be paid. It will be paid. So, I hope you remember VAT credit. So, this 10 rupees tax, government will pay it back. So, government says to see that you collect the entire tax. Government is saying to see that you collect the entire tax from the consumer on the entire value. You pay the entire tax. You pay the entire tax. And government will reimburse you the previous taxes paid. So, VAT credit minus 10. So, value of product is equal to rupees 600. VAT rupees 60. Invoice so C consumer will pay 600 plus 60. What C will do? C will pay the entire 60. C will pay the entire 60. And whatever taxes C has paid, VAT, it will be given back. So effectively C paid 50. Effectively C paid 50. Why? Let me tell you. B did not pay any VAT because on this transaction interstate VAT was not applicable. B did not pay VAT. So you thought that this VAT, you thought that this much of is saved by the consumer. There is no VAT on this. If VAT is not applicable in case of interstate, ultimately VAT is saved by the consumer. No VAT applicable. But when from here to here the sale will be made, even this VAT will also be collected by the government. See here is the example. This 50 is 30 plus 20. Whatever VAT was not deposited, ultimately it will be taken here. So don't see that government is not collecting VAT on this transaction. Ultimately it gets collected. Because how it is implemented on ground, C has to pay tax on total value 600. C will collect tax on total value from the consumer. And government will get the total VAT on the total value. And it will reimburse only what has been deposited. So ultimately, government is getting the total VAT on 600, which is 50 plus 10. Government is getting tax on total value 600, which is basically 60. Understood? But this is not exactly true. There is a slight difference. There is a slight difference. Most of the logic is true, but there is slight difference. What is the difference? When C collects the total tax 600 plus 60 and deposits to the government, the way in which VAT is implemented. So C gives the tax 60 rupees to which government? Bihar government. To Bihar government. And C gives the proof that he has already paid 10 rupees tax to UP government. So when Bihar government gets the 10 rupees slip proof, so Bihar government says to see that you have deposited 10 rupees tax to UP government and you are giving 50 rupees tax, you have deposited 10 rupees tax to UP government. So Bihar government will not give the credit of the taxes that you have paid to UP government. Bihar government will not return tax 10 rupees, no, because you have deposited 10 rupees tax to the UP government. If you would have deposited to Bihar government, then only Bihar government would have credited this tax. So C understands that since it has purchased from other states, so C very well understood earlier only that C will not get the credit. So when C understands that C will not get the credit, so how he prepares the bill? So how he prepares the bill, what he does is, so C understands that he will not get the credit. So what C will write is cost of inputs. He will write cost of inputs 310. Value addition by C, value addition 300. VAT credit. He knew कि he will not get the credit, so VAT credit is 0. So value will become 610. VAT will be imposed on 610, that means 61. So invoice will become 610 plus 61. So how it will look like? So consumer will have to pay 610 plus 10%, 61. C will deposit 61 to government and he will not get any credit. This happens. So when C is not getting credit and C is depositing 61, so still you are seeing that VAT, which is 61, so VAT is being imposed on 610, that means 10 rupees. This 10 is VAT, this 10 is VAT, which is included in 610, and on that VAT again VAT is being imposed. Cascading effect of tax on tax. So in case of interstate transaction, VAT credit is not available, and since VAT credit is not available, again cascading effect of tax. And there are a lot of transactions happen all across the states. Among different states, a lot of transactions happening on a daily basis. So on all those, no VAT is creditable and it is again creating tax on tax. So the second major challenge was VAT credit was not applicable in interstate transactions, and hence it was creating cascading effect. So two major challenges we saw even after VAT. First challenge, center imposing its own excise, state imposing its own VAT, and both were creating cascading effect. And the second challenge, in case of all interstate transactions, one state to another, the other state is not giving credit of the VAT paid in the previous state, so again it is creating cascading effect. Right? Then GST came. So what did GST do? So what happened? To resolve the first challenge was center was imposing its own excise, CST and other things. And in this example, if we would have taken CST also, in this transaction CST will be applicable and I have assumed CST is 0. If CST will be there, then the first challenge automatically comes here also. If excise duty is there, then the first challenge is also there, right? I just assume it is 0 to make you things clear regarding VAT. So, listen carefully. So, two challenges exist even after VAT. So, what government did is, just assume, central government said that it will not impose any of its own indirect taxes. If central government removes all its indirect taxes, excise, CST, service tax, if central government removes its indirect taxes, then first challenge got resolved, because the first challenge was center was imposing its own tax, state imposing its own tax, and both creating cascading. So center said that it will not impose any of its indirect taxes. First challenge resolved, right? And central government made the entire India as one state for tax purpose. The central government brought a law that in all the interstate transactions, one state or another, the states will be bound to give credit. So India, all over India is treated as one state, and now the credit is given back seamlessly all across India. Does not matter if the product originated from Tamil Nadu, moved to Karnataka, then Gujarat, Maharashtra, then UP, and then it reached Bihar. Does not matter. Every state passes on the credit smoothly, because all over India is made as one state for GST purpose. So credit is made applicable, available all across India. Does not matter from which state to which state is going. Both problem resolved. So credit availability is made applicable all across India, and now you know that central government cannot remove all its taxes, indirect taxes, excise and CST and all this. Practically, it's not possible. So what central government said? Suppose VAT, a state is imposing VAT 10%. So central government said that it will not collect its own excise and CST on all these indirect taxes, but let's increase this VAT rate to 20%. Let's increase this VAT rate to 20%. Out of this 20%, 10% will go to center. Out of this 20%, 10% will go to states. So 10% will go to center. So this became GST rate. 10% will go to center, it is called central GST. 10% will go to states, it is called state GST. So VAT rate, which states were, listen carefully, VAT rate, which states were earlier imposing, central government removed all its indirect taxes. VAT rate was increased, and in this VAT, center and states started sharing, and this is the GST. So what is GST? Goods and services tax. What is GST? It's VAT only. GST is a value added tax. And now when 20% tax GST is imposed, it does not create cascading effect. Now taxes are not being levied separately as such. That first center and then states, that was creating cascading effect you just saw. Now there is a whole 20% rate. And then center and states are shared. So central government removed its taxes and this VAT rate was increased, and now in this, if they are sharing, it is not creating cascading effect because this is imposed once. So first challenge got removed, and second challenge, all India was made one state and the credit is applicable all across India. There is no difference between one state to another state. So this VAT rate increased, this became basically GST. This is GST. Center and state shares half of. So GST, GST means the tax which is imposed on goods and services tax, GST. But what's the mechanism of GST? What's the concept of GST? GST is a value added tax. Now let me take an example of GST. So A, B, C, consumer. Let's say A value addition rupees 100, rupees 200, rupees 300. And GST rate, it's let's say 20%. SGST rate, SGST 10%, C GST 10%. What will happen? $100 plus 20, GST rate 20%. So A will pay SGST 20, SGST 10, CGST 10. What will happen here? I am not preparing the bill again and again. What will happen here? 300 plus, let's don't write 300 plus 20%, 60. So B will deposit 60 and he will get 20 back. B will deposit 60 and he will get 20 back. So SGST 20, CGST. So B deposited 60 and got 20 back. So ultimately B paid 40 rupees GST, SGST 20, CGST 20. Again C has already paid 360. So it's a GST is basically VAT, only C has paid 360. For his work he wants 300 and he will have to pay tax. How much? On his value addition 20 means 60. So 360 he has paid, 300 he wants for his work and he has to pay 60. So 360 and 300 plus 60 is 720. So it will be 600 plus 120 tax. So he will pay 120 and he will get back whatever he has paid, 60. So effectively C paid SGST 20, sorry, SGST SGST 30 and CGST 30. In this mechanism, it will keep on going. This is GST. This is the way GST works. This is the way GST works, right? It will keep on going smoothly all across India, does not matter. SGST, CGST are same. Understood? Now, so it's the same mechanism as it was happening in VAT, value added tax. You are seeing. So GST is a value added tax. Now, suppose you understood this 200, 20, 40, 20, 60. Okay. Now, suppose this is one state and this is another state. So A and B are in, let's say, UP and C and consumer is in Bihar. Then what will happen? Who will get the tax? How much? So that example gone. Now I am separating this into two states. So from here you very well know that center, how much center will get GST? Center will get the same 30 plus 20 plus 10. So here center will get 60. State GST. How much UP will get and how much Bihar will get? That you need to tell me. Because center is getting 60 and states combined is getting 60. 30 plus 20 plus 60. So out of the 60 state GST, how much will go to UP and how much will go to Bihar if it is across the state? Think over it and tell me. How much will go to UP and how much will go to Bihar? So most of you think that this SGST and this 10 and 20 will go to UP and this will go to Bihar. But this is not true. This is not true. This is not true. The entire SGST is 60. The entire SGST will go to Bihar. UP will not get anything. Basically, what happens? Whatever SGST UP collects, 10 and 20, it will have to pass it on to Bihar. It is bound to pass it to Bihar. So Bihar will ultimately get the entire tax, entire SGST. That's why this GST is called consumption based tax, destination based tax. If there is one source state, destination state, all the tax is collected by the destination state, that means Bihar. It's a destination based tax, it's a consumption based tax, produced here, consumed here. So it is being collected by the government where the consumer lies. Now some people say that, sir, then what's the purpose of UP, why UP will produce and all this? The answer is, when Bihar will produce and sell it to UP, then all the tax UP will get, all the tax UP. But the logic, this logic, let me tell you, see, why is this? Consumer is paying how much for the product? 600 plus 120. 120 is the tax. So the 120 tax which consumer paid, 60 got deposited here, 40 got deposited here, and 20 got deposited here. So government is collecting 120 tax. Central government 60, state government 60. From whose pocket this tax is getting deposited? The consumer. And where consumer lies? Consumer is in Bihar. So if consumer is paying the tax from his pocket and he belongs to Bihar, then don't you think that the tax which the consumer is paying, it should be used for the development where the consumer lies? Whatever taxes we are paying, the logic is it is used for our development. So if I am in Bihar and I am paying tax, so don't you think that that tax should be used for the development of Bihar? This is the logic. It's a consumption based tax. Wherever there is more consumption, that state government will collect more GST, SGST. That state government will collect more GST. Now there are 25 crore consumers in UP. Uttar Pradesh population is 25 crore. Maharashtra population is less than 10 crore. But Maharashtra collects more GST, SGST than UP. Why so? Because Maharashtra has more factories, they produce more, their per capita income is more. And since per capita income is more, their consumption is also more. Consumption does not depend only on individual, it depends on per capita income. The 10 crore people of Maharashtra are consuming more, their income is more total combined as compared to the 25 crore people of UP, because 25 crore people of UP are poor. Now someone was saying, some students say here that, sir, what is the purpose why UP government will establish industries? The reason is clear. Maharashtra has more industries. They don't get SGST for that. But since more industries, more job, more money, more consumption, more SGST. right? And anyways, what the central government is getting 60, out of that central government again gives to all the states depending on the Finance Commission report that we will study later on, right? So this is the logic. Now one more thing that you need to keep it in mind. When B sells to C, it is an interstate transaction. It is an interstate transaction. In case of interstate transactions, SGST or CGST are not levied, rather IGST is levied, integrated GST. In all interstate transactions from one state to another, IGST, integrated GST is levied by center, which will be the sum of SGST and CGST. So in case of interstate transaction B to C, IGST is levied, not these two. But every logic on ground remains same. So what will happen? On B to C, officially on B to C, IGST will be levied. How much? The sum of SGST and CGST. And out of this again 40, half of will be divided. Half will go to center and half will be passed on to the consuming state. So practically on ground everything remains same. But on paper, when B will sell something to C, IGST will be imposed, and IGST will be basically the sum of SGST and CGST. So suppose bread, on bread 10% SGST and 10% CGST. So if bread is sold within Delhi, SGST and CGST 10%. But if the same bread will be sold from Delhi to UP, then IGST 20%. So everything remains same. Out of IGST, half will go to center and half will be passed on to the consuming state. But only on the name, officially paper, it will be written IGST. But everything remains same on ground. Understood? So IGST, integrated GST, is levied. Only center has the authority to levy IGST. Across the state, center has the jurisdiction from one state to another state. IGST is levied in 3 cases: from one state to another state, from one state to other country export, and from other country to one of the state import. In these 3 cases, IGST is levied. So integrated GST is levied in case of interstate transaction from one state to abroad to India. You have seen one case. Let us see the case of exports and imports. Now in this same example, let us suppose that, so in this case of IGST, basically what will happen? Center will get 60 and the state will get, Bihar will get the 60, UP will not get anything. Out of this 20, state Bihar will get. Out of 40, half will be passed on to the consuming state, Bihar. Okay, so let us understand the case of exports. In this case, if billing has to happen, let's take a normal case. Suppose this is one state and C is selling to a foreigner, export. Suppose C is doing export. How this bill gets prepared? Normally, in normal case, suppose it is in India only, then how bill is prepared? By C, cost of inputs rupees 360, value addition rupees 300, GST credit minus 60, value of product 20%, right? In normal situation, if this is sold in India, this will be the bill, right? And this will happen in normal situation. But in case of export, when C is selling to a foreigner abroad, it will be called IGST. Everything on ground remains same, this will be called IGST. And government has said that, listen carefully, in this scenario, what is happening is, at every point, government is giving the credit back of the previous taxes paid. In this case, Government is giving back the taxes whatever is previously paid. Even if government is giving back, government is collecting taxes or not? Yes, government is collecting. Government is collecting at this point also. Government is collecting at this point also. Government is collecting at this point also. Even if it is giving back the taxes, some tax is being collected by government at every point. So how much is collected here? Rupees 20, rupees 40, rupees 60. So ultimately government got how much tax? 60, 40, 20, 120 rupees. 20% of 60. So government got that tax on total value. Now, when C is exporting, so in that case, since from one state to abroad, IGST is imposed. IGST is levied. But Government of India has said that if you are exporting abroad, then government will give the entire GST back. Government will not levy any IGST. Government will give the entire, whatever IGST government is collecting, government will give the back to promote exports. To promote exports, government will give the entire GST back. So, government, if it was a normal case within India, government collected how much? 20, 40, 60. Now, government is saying that if you are exporting abroad, even this amount, government will give back. Government will give back. So, this government will give back. So, this will become 0. So, when C understands that he is selling abroad, C understands that C will get the IGST back. C will not impose IGST, and C will not impose IGST. If C will not impose IGST, then what will happen? Till this point, how much taxes C has paid? Till this, suppose C has not exported, at this point, how much taxes C has paid? 60, right? C has paid 60. So, C will not further impose any tax. C will not collect any tax, 0. C will not collect any tax. C will not collect any tax. Let me tell you, see. So, C knows that he is exporting. So, C will put IGST 0. C will not collect any tax. In how many price C will sell? 600 to the consumer. C will export in 600 rupees. But C has paid 60. So, C has paid 300 plus 60, and for his work he wants 300. So, effectively C wants 300 plus 60. But C will not charge, because C has been told by the government that if you are exporting, all the taxes will be given back. So, C will sell to the foreigner in 600 rupees, and whatever taxes has already been paid by C, 60, whatever taxes have already been paid by C, 60, will be given back to C. So, effectively, how much GST government collected? Nothing. It collected 40 year, 20 year, and government is giving back 60. So, effectively, government is not collecting any GST in case of exports, and that's why we say that exports are 0 rated. 0 rated means there is GST on exports, but ultimately government gives it back. So, suppose on bread GST in India is 20%, but if the same bread is exported, C will not impose GST and C will get the entire previous money paid back. So, as such, there is GST rate, but effectively government gives it back, so effectively it becomes 0. So, on exports there is no GST. Effectively, there is no GST on exports. This is called exports are 0 rated. Exports are 0 rated. right? In case of imports, it's quite simple, no need to go into that. Suppose I'm in Gujarat and I imported something. I imported something worth rupees 100. So on that 100, I will pay IGST. So on imports, there is GST, IGST, and that goes to government. So if I'm in Gujarat and I'm importing something, suppose I imported something worth rupees 100. So I will pay IGST 18% or whatever is the rate. Whatever is the rate, that IGST rate is basically sum of SGST and CGST. So I will pay, so if IGST is 18% and the product value is 100, so I will import and I will pay 18% to government. IGST, in case of imports, I will pay IGST to central government. But again, out of that IGST, half will go to central government and half will go to the consuming state. If I am in Gujarat consuming, half will go to Gujarat. But there is one catch. When I am importing 100 rupees of goods, first customs duty is imposed. Customs duty has not been subsumed under GST. Even after GST came, customs duty has remained. Customs duty has not been removed. Customs duty is still there. So the cascading impact of customs duty is still there in GST. But it will remain there because customs duty, it is imposed on export and import of goods. So not on exports, it has become zero. But on imports, customs duty will remain there. It will never be removed. There is no plan of removing customs duty. Because its purpose is if the goods are entering into our country, then for that purpose it is being imposed. So customs duty has remained. So if I am importing 100 rupees goods, first customs duty will be imposed. Let's say 10 rupees customs duty. So it becomes 110. And now on that 110, then IGST will be imposed. So still cascading effect is there because of customs duty. So customs duty cascading effect is there. Understood? So IGST is imposed in across the state transactions from one state to another state, exports and imports. Exports are zero rated. Means there is GST on IGST on exports, but effectively government, but since government reimburses all the GST in case of export, that's why it is called zero rate. See, some says that then why to collect here? Arey bhai, when A is selling to B, no one knows that ultimately it will be exported or not. So how can government exempt GST? If A is selling some raw material to B, whether it will be exported, ultimately no one knows. So government collects. But ultimately if it is exported, a proof is provided and then government gives the taxes, whatever is the taxes collected in the chain, it gives the entire tax back. Now, some says that sir, B has deposited tax and A has deposited tax 40 and 20. So why government gives the tax back to C? B has deposited and A has deposited, but who has paid from his pocket? C has paid, na? So government gives back to C. Okay. So how this structure looks like in case of when GST came? When GST came, how it looks? So it looks like presently this is the structure. Presently we have indirect taxes. Under indirect taxes center, we still have a customs duty, right? And states SGST and stamp duty. Here customs duty, IGST, CGST. So this is the present structure of today. The cascading effect because of this is still there. It will remain. Let's see till when. Okay. So I hope that you got a proper understanding of GST, and I hope that you got a proper understanding of GST and IGST, where IGST is imposed. So that's all for today's class. In the next class, we will be discussing various other issues related to GST, why there are different tax rates in GST, what is the model GST, what are the issues in GST, what is the inverted duty structure, all these things, GST and related issues and reforms, we will covering in the next lecture. Thank you.